Oh, buddy, no. I am the operator. I have
Okay.
employees underneath me. I have accountants. I have operations people. But when I started off, it was just me.
Yeah.
I had a third-party property management that I hired,
Hmm.
right? But yeah, I am the operator. From day one, our business model is we are operators.
Okay.
We are not conduits on the way to see, like we're not toll collectors along the way. You give this person a toll, you give this person a toll, and then maybe the money gets to the last person.
Yeah.
No. You give money to me, and my employees and myself are managing it every single day. So
Okay.
there are no toll collectors along the way.
Hmm.
You, me, transaction.
Hello, and welcome back to the Very Real Estate Effect podcast, a show dedicated to real estate investing right here in Quebec. And yet today, we're having a very interesting guest from the US. So hello, Omar Khan today. How are you?
Hey, how's it going? Thanks for having me on the show, Axel.
I'm very excited to go through your story and everything that you're doing. And before I completely introduce you, I just want to remind everyone, thank you for sharing this episode with a friend who could benefit from this conversation. Keep following us on social media. And if you're listening on your phone, please press the three little buttons. I think it's the top left, subscribe, and it will help us reach more people like yourself. So, Omar, you are the founder of Boardwalk Wealth. You've transacted over more than 500 million in multifamily, mostly in value add and development projects. You're very active in the Southeast and Midwest US. And as a good fellow Canadian, you moved from Toronto to the US in 2015. So how in the world did you get started in real estate investing?
Oh, well, I was working in good firms in Canada. I had a good network. My family's a business family. So the germs for doing some form of an entrepreneurial gig were always there. I just feel like it's much harder for us to do business in Canada. Just generally, there's so many, lending is harder. The investor mentality usually I feel isn't as there as much as you'd see in the US. So I had lots of great experiences. I was also about 30 around give or take 30 when I moved to the US. So it was just, when you have the right set of experiences, you go to the right market. I had to do some business. This turned out to be a great business by the grace of God. So here I am. I wish I could tell you, I was a kid and I wanted to do this and then I wanted to do this. It wasn't any of that case. It was just finding a good business, having a good set of skills, having a good network. A lot of things had to be in the right place.
Yeah. And there's a lot of piece, as you said, that already aligned with regards to being in good, working in good companies and good businesses for you to be able to make that jump. So already in Toronto before 2015, were you doing some real estate?
No. I was working in RBC. I worked in RBC and Mackenzie. Both are asset managers. And then in Calgary, I worked at CIBC and Synovus, which was a spinoff from Encana.
Okay, so then wise decision, you moved to the US, and that's when you fell into the multifamily melting pot.
Yeah, that helped, right? There's a lot of good tax advantages here. It's a scalable business. Like most asset management businesses, it's a scalable business. There's a lot of tax advantages here. And then look, you don't have to explain the concept to somebody because it's a very attractive investment class to begin with. People conceptually understand it.
Mm-hmm.
So that was also a very alluring reason to do it, right? Because your sales process is much easier. And also it's a proven asset class. So, you don't have to go explain the concept to somebody. It's not like I'm trying to build, like a new software that solves a problem that might happen in 5 years, but it's so advanced that people haven't had experience with it.
Yeah, no, as you say, it's a lot more of a tangible product to sell. People understand
and it's been proven, and it's a proven asset class, right? So people have seen it, they've gone through it, they understand it. So this way, all of those factors are already there.
Mm-hmm. And so what was your first deal like? Where was it located? The size? Did you fundraise?
Yeah. Oh, yeah. I wish I was that rich, man. I wish I was that rich today. It was the first deal as an operator, was in Jacksonville, Lakewood Oaks, 138 units. It was 12 point something million dollars, 12.1, 12 to 12.1 million dollars. Obviously, we raised funds for that.
Mm-hmm.
And we were off to the races. But again, a lot of the stuff around P&L management, operations management, capital markets, a lot of those experiences I already had working in my earlier roles in equity research and investment banking and portfolio management and operations. So a lot of those experiences were already there. For instance, I wouldn't have been able to do these with my other set of earlier experiences. So it was also, like things led up to this point. It wasn't like something. I mean, to be honest with you, I think I bought my first 100+ unit apartment building before I bought my first house ever.
Yeah. Wise decision.
Yeah, I mean, I was never interested in buying houses. I know everybody loves to buy houses. I mean, I have one now. I'm sitting in it now, but I've never really understood the whole, hey, buy houses and do all of that stuff. I never really understood.
Yeah. You really saw it from a straight investment and return.
Oh, yeah. Again, my background was in investments in capital markets. So the whole issue there was, I mean, I still say this publicly. I don't necessarily have a love for real estate. I just think it's a good way for our investors, our partners, and for ourselves to make money.
Yeah.
And tomorrow, if it's another business where we feel we can make money long term, we'll do that because it's a means to an end, right? It's not like it's
an attractive investment vehicle.
Exactly, but it starts with being an investment, as opposed. It's not a passion project, right? Yeah. It's an investment. It's not a hobby. It's a business, and we treat it like a business, basically.
Yeah, and it kind of circles back to having that investor mindset, where at the beginning, okay, it was just a good asset class, and it's something that people understood, and it's something that you feel you could sell, and maybe one day there'll be another product line, another investment vehicle that's just as convenient, and maybe you'll orientate and pivot to that.
Yeah, as long as it's stable, as long as it's a proven model, and it's tested the test of time. Yeah, we have no issues doing that.
Okay, so let's go back to that first 120 unit property that you bought before your first house. You said the price was around 12 million. Do you remember roughly how much you had to raise? And can you explain to us, like, how
it was 138 units. We had to raise about a change over $4 million, 4 point something million dollars.
Okay.
Yeah. And so we just picked up the phone, started calling everybody we knew. And it was touch and go for a little while, like everyone's deals. But it was good place, right time, right purchase price. We were very lucky. We had a good network. So again, I wish I could tell you, there was a sequential series of events, right? You do this to get to this. But a lot of this was having the right networks and people, for instance, who worked with me, they knew what my character and work ethic was like. Because when I was working with them, I didn't even know I was ever going to do this. Right. So a lot of times it's your network, basically, as opposed to, hey, you go take this coaching program and you go do this and you do that, because it's like character, right? I mean, if somebody can vouch for your character, it's that sort of thing, right?
Yeah. And that goes a long way. And so the people that you approach to participate in your deal, or rather that you offer the possibility to come alongside with you in the adventure, was it colleagues? Was it friends and family? Like,
it was everyone, man. It was everyone, man. Beggars can't be choosers. Beggars are choosers. And look, I know there's a lot of reframing there about how invest in my deal versus I'm giving you an opportunity. People like to do that. Hey, you're not asking them for money, you're giving them an offer, right? For us, it was both. I was like, look, man, I've been upfront. I make money, you make money. Nobody's doing a charity with each other.
No.
You are only giving me money if I make you money. But again, I also can't make money if you don't give me money. So, you're not offering me something and I'm not giving you something like unique. It's a business transaction.
Yeah.
But again, people have to trust you. And how do they trust you? They probably work with you. They know of your character and all of that sort of stuff, right? But you still have to ask. I know a lot of people give this advice. Oh, you'll appear needy. Don't worry. Appear a little needy if you need the money. It's okay. Don't worry about it.
And definitely put some urgency to it, because if you think it's going to take you 1 month, it'll take you 2.
Oh yeah, look. I mean, we had urgency. Basically, we had to close at a certain time. So the urgency was there. It wasn't like a artificial urgency. It was a real urgency. I have to close at a certain date.
Yeah.
Right. So that was a real urgency. Yeah.
And you said who are the other partners and what were their responsibilities?
I mean, we is basically my counterparty. Like, I have to close a party with the seller.
Okay.
That's what I meant by we. I mean, he also has to sell the deal. Yeah. He might not go to somebody else, but I mean, it takes 2 to tango, right? You can't just have a buyer and no seller, or a seller.
No. It takes 2 to make a transaction.
Yeah. It takes 2 people to sell a transaction.
Yeah. So then once you had acquired that 138 units, did you put an operator in place or how did it work?
Oh, buddy, no, no, no. I am the operator. I have
Okay.
employees underneath me. I have accountants. I have operations people. But when I started off, it was just me.
Yeah.
I had a third-party property management that I hired,
Hmm.
right? But yeah, I am the operator. From day one, our business model is we are operators.
Okay.
We are not conduits on the way to see, like we're not toll collectors along the way. You give this person a toll, you give this person a toll, and then maybe the money gets to the last person.
Yeah.
No, no, no. You give money to me, and my employees and myself are managing it every single day. So
Okay.
there are no toll collectors along the way.
Hmm.
You, me, transaction.
Yeah. So then that first property, it was a good springboard. Did you optimize it fairly quickly?
Yeah, it was all the value add that was entirely value add, basically. Look, we do developments now,
Hmm.
which is significantly more complex. But now I also have a bigger team. So I mean, it takes time, right? I mean, you
Yeah.
can't just get to like stage 100, level 100 without going through the first 99 levels. So yeah, that was an entirely value add, complete reposition. We had like $1 million+ budget on that, just this renovation budget on it. We completely repositioned it and sold it in about 2.5 years. And investors made close to 20% IRR.
Very nice. Okay, so that's a property that then you, I don't want to say flipped, but that you resold 2 years later.
Oh, no, no, you can say flipped. It's all a
Okay.
flip. Anybody who's doing value add, they can use fancier words like exit, liquidation. These are all flips. Everybody's a glorified flipper,
Yeah.
basically. Yeah, and it's a flip. A flip is a flip. Just because somebody flips a house and now somebody's flipping a bigger house doesn't change anything. But the fact of the matter is, if you're just a flipper and not an operator, the problem becomes if the market conditions go sideways, then you can be caught in a really bad situation. So there's no harm in being a flipper. I think being a flipper really works in certain times in the market, but you better make sure that you have the right people on your team and you yourself understand all aspects, basically capital markets, lending, operations, renovations. You understand all of these things. And finding one person that understands all of these things is very rare.
Yeah.
Because you can find people who can understand the accounting or the capital markets or specific pieces.
Hmm.
A lot of people can't put everything together.
Yeah. And so, okay, so you resold this one about 2.5 years later. Did you have other transactions or other deals in the pipeline in the meantime?
Oh, yeah. We've now transacted. Hold on, let me see. We have now 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 16. So we have now done like 15, 16 transactions, somewhere in that realm between acquisitions and developers. So yeah, when we had that, we were doing this a couple of months later, maybe 5, 6, 7 months later, somewhere in that range. We bought another transaction. And then, we just kept, okay, we're opportunistic, right? So if the deal presents itself, we'll buy it if it's in our budget. But then, then you start buying. And once you're off to the races, you're off to the races. But again, you're only as good as your last transaction. So if you're not performing, then the issue becomes people that are not good operators, their issue becomes that if they can be, say, a good operator for one transaction. They've got 2 transactions, maybe they're a decent operator. As soon as it gets 3 or 4 transactions, their entire company implodes.
Yeah, they can't scale.
So, yeah, so you're always having to manage those issues. And a lot of that simply, look, this is a very capital intensive business. So you need to have money in your pocket. Like you can't just without money, I know all these gurus say, oh, zero money down, you can do everything. Without money, you can't play this game.
That's not true. Yeah.
It's a rich man's game, basically. No. If you don't have money, you're just shit out of luck, basically.
Or you can do very small transactions and get a small portion of it, but you can't really scale.
That's fine. I mean, yeah, and look, man, my point is people look down on small transactions. Money is money, man.
Yep.
Right? If you make money, just shut up and do the deal.
Keep going.
Oh, money is money, right? Why, yeah. My point is money is money. Why? Like I told you at the start, right? When you said, "Hey, who did you ask?" What did you say? I told you, like beggars can't be choosers, right? So I didn't make a distinction. I said, "Let's go." So if you are starting off your career or whatever you want to do a deal, you find a good one, do it. Money is money, man.
Yeah,
cash is cash.
So just to understand, so all those deals in the Southeast, what was your pipeline like? Like, where do those deals come from?
They're mostly all from brokers.
Okay.
There is an active broker network. Anything, I think it's across all verticals, but I only know of mine. So I can only speak in regards to mine. When you're buying, look, I think anything above 12, 15, $20 million, there is an active broker network there, basically. that you're buying them. All this stuff that you hear about, I'm sourcing off market and all, yeah, that might work for houses and stuff. It doesn't really work for this.
But for smaller properties, but you're right.
Yeah, it might work there, but there again, maybe. But for bigger properties, look, think about it this way. Whoever owns it is not stupid, typically. They might not be in real estate, maybe they've inherited it, but they're definitely not stupid.
No.
They've got advisors, they're rich people. If one or two people own a $50 million project, you might think they're stupid. They might pretend to be stupid, but they're not really that stupid.
No.
Right? So therefore, they are going to have an advisor. They're going to go through a broker. It doesn't mean you can't get good transactions. You can get really good transactions. It just means that typically 99.9% of the time, brokers are involved, and all these people that try to shortcut their way around it, they typically seem to have the most amount of problems.
Yeah. And so, okay, so then are there any properties that you found because you had already done a deal in that neighborhood or in that city and asked someone to prospect?
No. Everything comes through brokers or other owners we know. But again, they're also going through a broker. The only reason they transact with us is because we've worked with them or we know them. There's many transactions on my market. When I'm bidding, I probably know the counterparty that I have, or I met them for a drink or dinner or something at some point in our career, right? That doesn't mean that they'll just hand over their deal to me. Hey, you're a nice guy. Here's my $40 million transaction.
Here are the keys. Just take it.
Here's the keys. You seem like a nice guy. You're a good-looking guy. You're a nice guy. Whatever. Yeah, it doesn't really work like that.
No.
These are all professionals. Look, you have to understand the same way you and I want to make money, they also want to make money, right? So that's why they need to have a broker and their lawyers involved, and you need to have your brokers and lawyers involved, and there's nothing wrong with that, basically.
So, okay, so then after those first few deals, you said then you started to do some development. What pushed you towards that new asset class and new product?
I don't think it was a new asset class. It was the same asset class. We're still doing multifamily. What we were basically seeing was, as the market was getting hotter, margins were getting compressed. More and more people were coming in. Look, similar to me, like I came in, right? So I'm sure the guys before me said the same thing. Oh, more people are coming in. So now I'm saying the same thing. Every guy who's in the business, when new people come and say, oh, new people, they're stupid, they have money coming in, but they don't realize they were also coming into the business at some time, right? And they were other people before them. So the same way other people must have done this before me, because again, this is an asset class that's been there forever, right? We were seeing, as the market was getting hotter, more and more people were coming. Look, we were selling some of our properties to these people, so we're not judging anyone, right? But what we realized were margins were compressing, number one, in the markets we're in. And the only tangible way, systematically, if you're doing 4, 5, 6 transactions a year, was to start going into development. So we have both verticals. We have development as well as acquisitions. Because we're opportunistic, wherever we find a better deal, we do. But we realized pretty early on that we had to build both of these verticals, because that would give us more flexibility, basically, to, have more opportunity and deal flow coming our way.
So what was your first development deal like? What kind of, what size, where was it? And kind of walk us through the process a little bit.
The first development deal was with one of the guys I know, Dustin. He's now my partner. He's an experienced developer. He developed smaller projects up in the Midwest. Him and I just started talking. We've known each other for a long time. And from there on end, we just started putting deals together. Again, I wish I could tell you, right? I mean, now looking back, a lot of people ask me this question, and I wish I could tell you, there was a logical series of events, right? I did this, and this happened, and then I read this book, and then I went this way. A lot of what happens in life is, when you're running a business, is, you do something, you get really good at it, but then you meet the right person, and you feel, okay, this person offers a lot of value. And oftentimes, if there's a meeting of the minds, right? And then you try to do more things with that person, right? So it's not really a logical series. A lot of times there are detours and sideways, and you think, should I do this? Should I not do it? That's how it is. So it wasn't like I was planning on doing developments. I realized I needed to have another vertical. I met this great guy. We did a couple of projects together. He was an investor of mine as well. And he'd been putting together smaller projects. We're talking 50, 70 unit developments. And then, we decided to partner up together and start doing, we are now developing close to 1,200 units in the next year and a half or so. Wow. And now right now, there's 300, 400, 500 already under development.
Okay, those are some pretty large.
again, I
project.
couldn't have done that if I didn't do all the other stuff earlier.
No,
right?
of course,
Like it's everything's building on each other,
yeah,
basically.
exactly. You said like, oh, there's no perfect sequence, and it's not like you had this big plan, but it seems like it greatly compounded, as you said. Like he was an investor of yours, and you probably saw him do some development, and you realized that you needed that new vertical, and then hey, he knows the market, he's got a team, and so on. So that really helps.
But again, none of this stuff would have happened if I hadn't done all the other individual steps along the way. Like if I'd taken shortcuts, right?
No.
And if I wasn't a good operator, I didn't have a good team that I paid my employees and all of that around me. If I didn't do all of that work, then I could have met the same guy and he might not have partnered with me, or I might not have partnered with him, right? You understand? There's so many variables there that a lot of times people think, oh, there was like, you make a 5-year plan. And that's kind of nice, but it only works in movies like that.
Yeah. And again, you can make all the 5-year plans you want. You need to adapt. You need to change. The market shifts. Priorities evolve. I mean, everything is in constant motion. So it's hard to actually make a plan and stick to it. No one can do that.
Exactly. And look, again, if the market was offering way more better acquisition opportunities, maybe we would have not developed even.
Yeah.
If the margins were still so juicy, maybe we wouldn't have even gone down this path.
And just out of curiosity, those development projects, is it with the intent to resell individual units?
Oh, no. No, both. We've always had this with our value add as well. We don't like to we typically try to hold for 3 to 5 years. At least that's our projection, but we're always upfront with our investors. Okay. We don't like to make a very blunt assessment and say, okay, I'm going to do this in 2 years. Because frankly, I don't have a crystal ball.
Yeah.
And anybody expecting me to have a crystal ball, I tell them straight up, look, if you can predict the future, you shouldn't be in real estate. There's way easier ways of making money. So I'm not opposed to the concept of flipping, by the way. I'm very much pro that concept. But I feel like, when we have a transaction, if somebody gives us money that's too good to be true, everything is for sale, including the furniture in my house. You want to come buy it? Give me a good price, take it away. I don't really care, right? So we don't want to box ourselves into a corner by being either merchant developers, which are built for a fee and sell, or buy and hold people. We want to have an open exit. We want to structure our deal in a way that if we ever want to leave, we can easily leave. There's nothing holding us back. And from there on in, look, if the market's really hot, let's put it this way. If the Fed decides magically to drop rates by 200 basis points, and everybody becomes super horny again to do real estate, right? And all of our projects suddenly overnight zoom up in value. Yeah, I don't really care, man. I'll sell all of them. I don't really care. Yeah. So that's why for us, it's the flexibility is very important.
Exactly. And the it's not the luck, but you've created yourself the opportunity to have the choice. You have so many different exit plans. Some people, they have to sell in 3 years, otherwise their project doesn't make sense. Or they have to keep it for 10 years, otherwise they'll never make their money back. You can go either way. Yeah,
so look, but that's a decision we've taken right at the start, because that also might repel people, right? Some people might want to get out in 3 years and then they'll never give us money. But we'd much rather have that conversation up front, as opposed to get to the end of 3 years and then there's surprises.
Yeah.
Right? I'd much rather have somebody along with me who's a good long-term person with, who both them and I think alike in terms of what we want to achieve and our interests are aligned, as opposed to, you just say something and then 3 years later, the other person is disappointed, even though you yourself are doing the best job. So now you are frustrated because you say, hey, I'm doing everything possible. And the other guy says, well, you told me I was going to be out in 3 years.
Yeah.
Right? That's why.
And you have the best position if you have the flexibility and make the choice. So that's good. And your investors must like that as well. They just can't get cash trapped.
Look, I mean, we tell our investors up front, this is an illiquid investment. You know this. I can't just saw off a piece of a window and give it to you. And even if I did, what would you do with it? Right? So you understand this going in. So if you understand this going in, then we both know what type of expectations management is very important, I feel. Yeah. And a lot of times people show these very outlandish numbers, 20, 30, 40% return, and blah, and I'll do this, and I'll put this and that. And we tell people, look, if you want that type of a flashy person, you should go to that person because it's your money. You should be able to do whatever you want with your money. We're not flashy people, right? We're middle of the road, kind of conservative, not really, sort of, we're in the middle of the road type people, right? We're not flashy, we're not overly conservative, we're right down the middle. And that's our personality, basically.
Yeah. And,
So
and you and
that's just the way it is.
you give yourself the opportunity to be happily surprised when it comes to returns, because as you said, a lot of people tend to overcommit and then underdeliver, and then
Yeah.
they look like idiots. Whereas just if at the beginning they'd been a little bit less aggressive, they would have looked like they actually delivered what they said they were going to do.
Exactly. So, but again, it's a personality type, right? So that's why I said, if you understand your personality, then it helps you to find the right partners, the right employees, the right investors along the way.
Yeah.
So, but it's very painful in the short term because you'll get a lot of people along the way saying, well, I only want to do this for 3 years. And you got to turn away that money. And, sometimes when you need money, you don't want to turn it away, basically.
Yeah. And then, okay, so what I was going to say, what does the future hold for you? You don't have a crystal ball, but given the two verticals that you have now, the substantial projects that are on the way, like where do you see this going for the next like 2-3 years with what you already have?
Look, for us, it's continuing to manage our portfolio, grow that portfolio over slowly, steadily over a period of time. We've already transacted on over I think 2,000 units or so, apartment units. So for us, the purpose is more to keep doing things opportunistically, because I did the math a long time ago. 1 or 2 good deals are better than 5 okay mediocre deals, and not even including deals if you lose money on, because that's a separate ballgame.
100%.
So for us, I'm the type of person that I don't like to work more if I don't have to work more. I'll work a lot. I work crazy hours, but I'm not going to do repetitive tasks for no reason.
No.
Right? That's also, by the way, a reason why I had to quit my corporate jobs. I was getting very well paid, but a lot of that corporate work was pretend work. You have to show that you're working. You're not actually doing anything, right?
You're not creating value.
Yeah, you're not creating value. You have to sit at the office, go to mindless meetings, pretend and show to other people how much. And then you have to keep talking about how much for, oh my God, I'm so busy all the time, right? So I wasn't really that type of a person.
Yeah. Well, you just evolved. You grew out of it, and now you're exactly where you need to be in order to create the most value you can.
Yeah. So again, this was all a personality fit, right? If you have a personality fit, stuff happens. And if you don't, you don't.
Yeah. Mm-hmm. So now what, for anyone who's listening, and if they're in the US, what, just out of curiosity, what's your minimum investment that you'll look at?
Oh, well, we have Canadians as well as US investors, number one, right? So we've got lots of Canadian investors because I lived in Canada for so long. Minimum investments typically are $50,000 US. And a lot of this can just be found. You can just go to our website, boardwalkwealth.com. You can have it in the show notes, I guess.
Yeah, we'll put it.
There's a form right on the homepage. I don't know exactly where it is because I don't go to my own homepage. And you can just fill out your details with your email. You'll be added to our mailing list, and then you'll know whenever we do a transaction.
Okay. And then how can we help you if people are interested, they like what you're doing, other than contributing funds? Are there, are you looking for deals? Are you looking for exposure?
Yeah, no, we're looking for no. I mean, look, send me all your money. Number one, that helps. Right? So just do that. Just send me all your money. No problem. Hopefully you're not a terrorist, or you're not a criminal organization, or a money launderer or something. If that's the case, don't send me your money, please. I can't have more problems in my life. You please keep it. You do whatever you want with it. But short of that, look, we've got a great broker network. We've got a great owner network. So for us, it's all about investors. We just have to find more investors and just over a period of time, do more deals.
All right. Well, there's a lot of people right now that, fell in love with real estate 2-3 years ago when things were easy. Now that things are harder, they're contemplating stopping, or they're having difficulty to scale. What would be your advice to them right now?
My advice to them right now would be to quit. Because if you're going to think like that, you should quit. I 100% agree. Look, it's like any other thing in life, right? I mean, there's going to be ups and there's going to be downs. And if you don't like the downs, quit.
Yeah. I like it. I love the answer, man. It's not what I was expecting, so it's even better.
Yeah, no, quit straight up. It's no use torturing yourself if you're weak.
No. And then it leaves more deals for the people who aren't asking themselves.
Yeah, I guess. But my point is, look, if something's going to make you miserable and you're the type of person who's going to quit all the time, then quit. I mean, life's too short, man. To go hang out with your dog, go out with your wife or girlfriend, spend time with your kids, friends, whatever. Life's too short, man.
And go back to your employment job.
Hey, look, people shit on employment all the time. I'll tell you what, it's a great way. If I never had employers, if I didn't have great employers, great people, I would never be where I am today.
No.
I am only a product of the great people luckily who employed me, and then all the people during my employment who helped mentor me, right? Like they teach you professionalism, they teach you how to do your job. So without any of that, I wouldn't be where I am today.
No, it allowed you to be where you're at now and achieve what you have.
But again, it's a personality type, right? Everybody has a personality. You just have to match whatever you do to your personality, because life's too short, man. Why be miserable?
Yeah. Well said. I like it, man. Omar, it's been a real pleasure to have you on today. Thank you for sharing your wisdom. And again, to anyone who's listening, if you're interested, go check out boardwalkwealth.com, I take. And you can get some more information and get in touch with Omar and take it from there.
Thank you so much. Have a good one.
Thank you very much, Omar. And again, please share this episode with a friend who could benefit from this conversation. The point of the podcast is just to inspire and share. So let's just continue doing that. Omar, thank you again.
Thank you.
Thank you.